So our next and last classification here is the stockholders' equity section of the balance sheet. Owner's equity. This is probably the most complicated section to prepare, but if you kind of keep the outline of it firmly implanted in your head, then it's not quite so hard. This gives you a bare outline. So if you're doing the, you do the paid-in capital first, that's your capital stock, and you always list the preferred stock and then the common stock. But you have to tell the whole story. You can't just say preferred stock. You have to say 7% preferred and tell if it's cumulative. And you tell the whole story about it. How many shares are authorized, issued, and outstanding? Those are terms that you need to know what they mean. Authorized, issued, outstanding. The same for the common stock. You have to say what's the par or stated value, how many shares authorized, issued, and outstanding. You always list the preferred first and then the common. So the amount that's given here would be just the number of shares issued times the par or stated value. Anything over and above that is additional paid-in capital. And again, there you list the preferred first and then the common. That's the excess paid over the par or stated value. Okay. We're all familiar with retained earnings. That's the undistributed earnings of the entity. It's like all the revenues minus expenses that have not been distributed as dividends. So retained earnings, you have to specify whether it's appropriated or unappropriated, restricted, not restricted. A lot of notes to the financial statements give explanations of any of the restrictions in retained earnings. Why the restrictions? Why say appropriated? Because anything in retained earnings, the stockholders say, oh, well, you could give us a dividend on that. And if that's not management's intention, they communicate that by restricting some of it for future plant facility they're building or a bond issue that they're going to have to pay off. It's a way of communicating to the stockholders that, no, you can't have dividends on this. Okay, then we get into things, we're all fairly familiar with, we just get a lot more detail. Then you come down to some other stuff. The accumulated other comprehensive income, we've talked about comprehensive income in Chapter 4. This is where the accumulated, this is the equivalent of retained earnings for comprehensive income. It accumulates it. It's sort of all of the comprehensive income since the company started. So if you remember, comprehensive income, as far as we're concerned, is pretty much like the unrealized gains and losses on our available for sale securities, and then there's the various other items that get reported as comprehensive income as well. Okay, so treasury stock, company buys back its own stock, that's usually a deduction. Generally, we're accounting for that at cost, so you're deducting the cost of the treasury stock. And let's see. Oh, and then this is fairly, you've got to specify how much is attributable to our company and how much equity is attributable to the non-controlling interests. What's that all about? Well, we file consolidated financial statements, and in order to consolidate, the company has to control 51% or more of the subsidiary. Okay, so our company controls 51%. The 49% that we don't control is the minority interest or the non-controlling interest. And so we have to really say, well, how much of the equity is attributable to our ownership in that company and how much doesn't really belong to us. Okay. What else? Oh, all right. This outline here, which is on Blackboard, may be a good starting point for you. You can fill it in. You can, mess with it. You can add more categories to it if you want to put in the various current assets and current liabilities. It's really just a tool for you to use. I like to put up just the bare outline because there's so much to the balance sheet that if you have the bare outline in mind, then you have more of a chance of being able to fill in all the details. Okay, next we look at the format of the balance sheet.